Hey, everybody. Welcome to the CoinGeek Weekly Live Stream. I am your host, Mr. Kurt Wuckert Jr. Live 2 p.m. Eastern Standard Time, everybody. And we got a lot of viewers wondering who the special guest is. And it's been a heck of a year. So we have done more shows this year than we have done any other year. In fact, I think I only missed 3 weeks all year, and they were for travel. So I was basically just doing other on location shows and missing my Tuesdays. So you're welcome to my fans, and thank you to anybody that decided to watch, even if they don't like me. The guest today is somebody who was a big influence on me really early on. A lot of you know, if you've been watching my shows or reading my stuff, that I was a big gold bug. And for me, tokenization of commodities was something that I've been talking about since about 2005. Problem was there was no global attestation tool, and you had to trust somebody with the money and to attest to what was there. And so I actually wrote a paper about it in a college economics class and said, well, unfortunately, we don't have the tools to do it. But when somebody told me about Bitcoin a number of years later, it was 2012, and they explained what Bitcoin was and what it was capable of, it occurred to me, there's my public attestation and a third party ish that can approve of things and can be audited globally. So that's what I liked about Bitcoin initially, and so stuck out to me as maybe a good idea. And now 10 years later, we still don't have the tokenized commodities that I really liked at first as a concept, and so it's made me wonder, what's the wait, everybody? So I'm going to keep my personal stuff short and sweet today because I have a feeling we could talk about all kinds of stuff, and I think this is going to feel like a pretty short show. So, Alex Moon, if you could play the ad, we will be right back with Mr. Peter Schiff.
This is London, coming at you. Everybody, this is London. This is London.
Hey, Peter, how you doing, sir?
Okay.
Are you texting?
I was looking through my emails and stuff. So how long is the ad?
That was it, man. It was 20 seconds or so.
That was the ad?
We are live.
I was waiting to hear an advertisement for something.
No, it was the London Blockchain Convention. If you'd like to come as my guest, we'll fly you out. Look, the ticket's on me. We'd love to have you on stage. We can have you on a panel and talk about why gold should be tokenized on Bitcoin.
Well, when is the conference?
End of May 31st to June 2nd.
That's not a bad time to be in London.
It's a pretty good time to be in London. I know it's hard to leave Puerto Rico. I live in South Florida, so for me, every time someone's, hey, Kurt, you want to come speak in New York in December? I have to go, ooh, man, what are you paying me? So, Peter, you, for people that don't know who you are, I think you're a legend. Your work in the gold space, not just your business, but your advocacy, the education and stuff that you do, was crucial in my journey to becoming a libertarian and ultimately becoming an entrepreneur and a whole bunch of related things. So thank you for that. I would love to hear for people who don't know you. Can you tell us like the 2-minute version of your story? Why are you Peter Schiff, the gold guy? I know this is multi-generational with the Schiff family, so I'm sure we could talk about that forever, but go ahead. What's your story?
Well, I'm not just the gold guy. I mean, I do believe that gold is money, and I believe that the founding fathers put the United States on a gold standard, although we also use silver. But they did it for a reason. They were educated men. It's not that they didn't have paper money back then. They did. They invented the printing press long before the American Revolution. And so the founding fathers were familiar with the concept, and that's why they didn't want any part of it for the United States. They knew that it ended in disaster. In fact, the founding fathers had some experience with paper money, the Continental, which collapsed by about 90%. That was a paper currency issued during the Civil War, but at least it was backed by gold, unlike the paper currencies we have now that are backed by nothing. But we were on some version of a gold standard up until 1971, and I think the world would have been much better off, and so would the United States. We stayed on the gold standard, and instead of abandoning the gold standard, we abandoned the fiscal profligacy that led us to abandon the gold standard. If we would have cut back on government spending and not, run up these big deficits, I think we'd have a much more prosperous nation today with a much higher standard of living. because we'd have a much smaller government and therefore a much larger and more vibrant economy. So I've been an advocate of gold, and that investors should have a portion of their portfolios in gold instead of cash. That because I look at gold as liquidity. I don't think you should own gold instead of other investments. Although sometimes if investments are very expensive and you don't want to invest because prices are high, whether it's stock prices or real estate prices or bond prices. So where do you keep your dry powder? Well, that's gold, because if you're trying to keep your dry powder in dollars, it may not stay dry because inflation could erode away its value. And so it doesn't stay dry, it gets very wet. So, most of what I do is manage investment portfolios for people, Euro Pacific Asset Management. But right now, a lot of my portfolios have a pretty sizable allocation to gold and silver mining stocks. In fact, one of the strategies that we have is 100% gold and silver mining stocks. Now, obviously, that's an aggressive strategy. Yeah. You wouldn't want to put all of your, your net worth into that sector. But I think there's substantial upside potential as inflation continues to accelerate, and I believe the world will move back to a gold standard. Not because governments want it. Governments never want a gold standard, just like, kids don't want a chaperone at their high school prom, but the parents want the chaperones, and the taxpayers should want to be on the gold standard to chaperone governments from getting too big and running up too much debt. But since the governments won't do it, the private sector is going to do it for them. Sure. And, blockchain, the internet, all this technology is going to make it possible for private companies and private individuals to return to the gold standard without the governments having to do it for us.
Yeah, absolutely. And I think that there's a crucial thing. I've actually heard you speak on Bitcoin at length. And when I hear your opinions about it, I mean, people will criticize you as, you're just, some gold boomer who doesn't get it. But when I've heard you speak at length on Bitcoin, I'm actually thoroughly impressed. Like the way that you understand the economics of the system, and the way that BTC is implemented specifically, I think you make it very clear why you're bearish on the asset and the problems with BTC and the sort of laser eye maximalist thesis of Bitcoin goes up forever, yada yada yada. And so, but you just mentioned it now. Blockchain and the internet are two tools that allow us perhaps to utilize gold technologically in order to transmit value in gold. Do you see that as a system for perhaps trusted custodians and then the ability to transact in Bitcoin?
Look,
or in
I have
gold
spoken to dozens of people with projects right now regarding a tokenized gold. And it's not really tokenized gold. The gold doesn't become a token. The gold is a physical asset in a vault. What's tokenized is the evidence of ownership of that gold. The way the original paper currencies came about is they were backed by actual gold. They evidenced ownership of gold. You would take your gold and you would store it with a blacksmith, and that blacksmith would issue you a piece of paper that said, I owe you, 1 ounce of gold. And now you'd have that piece of paper, and instead of going to the blacksmith every time you wanted to buy something and getting your gold, you could simply give that piece of paper to somebody else. It was a bearer instrument, and whoever possessed it can go to that blacksmith and get the gold. So it became a more convenient way to utilize gold as money by using a monetary substitute for that gold, which was currency, which derived its value from the gold that it represented. And so when you're tokenizing gold, you're just doing a more modern version of a piece of paper. You're evidencing that gold ownership with a token, and that token can move along a blockchain with all of the same record keeping that you would have, let's say, with a Bitcoin, but with an actual commodity, gold. And now, if I want to use that gold as a medium of exchange, I don't have to use that bar of gold. I could just use the tokens that I have. And if each, let's say a token represents 1 gram of gold and it's divisible, for hundreds of decimal points, I can buy a pack of chewing gum. I can buy, a cup of coffee, and I can pay the merchant in gold very easily. And then he could use that gold to pay his rent or to pay his wages or whatever costs. And we can all transact in gold and do it quicker and less expensive than we're doing it now with fiat. Except the difference would be we would be using a medium of exchange and a unit of account that didn't lose its value over time, because the dollar and just about every other fiat currency are going to be losing 5-10% of their purchasing power every year, maybe more, due to inflation. And you don't have that with gold.
For sure. So a question for you. I've always thought of gold as a store of value. It's got 6,000 or 7,000 years of known history where it has not been worth zero. Do you see gold as something inherently, maybe not in your lifetime or mine, but should somebody be telling people like my children's age, for example, hey, gold could be worth $6,000 an ounce or something like that? Do you see it as being a perpetual up asset in the way that people think about stocks or other things? Or do you see it as fundamentally stable? Should we desire for it to stay roughly stable? What is your actual position on that?
Well, when gold is $6,000 an ounce, and it will be $6,000 an ounce, it will be more than 6,000. When we first were on the gold standard, it was $20 an ounce. And, it was as low as $35 an ounce in the late 1960s.
Yeah.
And, now it's 1,800 and change. But what's really happening, it's not that gold is going up. It's that the value of our paper money is going down.
Sure.
Because they keep creating more and more dollars. And so you need more to buy an ounce of gold. So gold's not going anywhere. Gold's just kind of maintaining its value, but the fiat currency is losing its value.
Yep.
And based on the enormity of the budget deficits we have right now and how much money the Fed has just created in the last few years, or even the last 10, but particularly the last couple, and how much more I think is going to be created to service an enormous debt that they don't have the political integrity to default on. So they're just going to keep on inflating to service it and redeem it. I think that the dollar is going to lose a lot of value in a very short period of time. And so that means you're going to need a lot more dollars to buy gold. But, even if gold is $10,000 an ounce, it doesn't necessarily mean that gold is more valuable. It just means that the dollars that you're using to buy them are a lot less valuable. And so you need a lot more of them to buy gold. Now, I personally think that gold is undervalued relative to, let's say, a lot of other commodities. And so I do think there will be a real appreciation in the price of gold relative to let's say copper or nickel or oil or wheat or soybeans, all these other commodities. I think they're all going to go up in terms of dollars. And again, it's just the dollar going down. But I don't think that gold has been utilized as money. Most of the demand for gold is, jewelry or industry. I mean, you have central banks that own gold, but they have the lowest percentage of gold in relation to their reserves, really than they've ever had. So gold is way under-owned right now by central banks based on what they've historically owned. It's way under-owned by investors. I mean, if you look at how much gold the typical investor has, particularly the larger institutional investors, endowments, hedge funds, they don't even own any gold. Whereas you go back to the 1970s, 1980s, and 90s, I mean, they would have, 2,
it was
5%, 10%.
One of the pillars, sure.
So gold is just way underowned by everybody as a store of value, as a monetary asset, as an inflation hedge. So I think as that demand returns to the market, the price is going up. I mean, the jewelry demand is there. It's not going away. I mean, it may be diminished somewhat. If the gold price goes way up, then that could, cause, a somewhat of a decline in demand for jewelry. But I think the demand for gold in electronics will continue because, it's just such a valuable component of it, and the amount of gold is small, so the cost is not that relevant to each particular chip. So they will be, if the price of gold triples or quadruples, they're not going to stop buying it. They need it. They're going to buy it.
All right. Absolutely. No, I'm a gold bull personally, so I do not disagree with you on the above thesis. But I would love to talk to you about Bitcoin. A couple of things about Bitcoin specifically. Bitcoin, Bitcoin went through a civil war. You may have heard it as the scaling war or whatever. Ultimately, it's split into a few different, quote unquote, versions of Bitcoin, basically. And I'm one of the minority contrarian types that looks at Bitcoin and says, well, Bitcoin is a very specific set of rules, and the BTC narrative of soft forks and the ability to change Bitcoin without having to admit that you've changed Bitcoin is one of those undermining things in Bitcoin, where BTC gets to keep the ticker, but ultimately has been debased in a way that they would say that it can't be. And so on the subject of tokenization, Bitcoin was always capable of issuing an asset. So you can issue an asset in Bitcoin script, secured with Bitcoin. You can have underlying Satoshis that are stacked into a token. And so you could issue a CBDC or a non-central bank digital currency, such as a gold-backed note or something similar, but also have it be essentially a basket currency, if you wanted to, between Satoshis and gold. So let's say, a kilogram of gold and 100 sats could be the basket currency underlying the token that is issued upon it. And then ultimately the computation of the network itself becomes part of that commodity asset. So it is a mixed commodity of its combined computational security and whatever gold is tokenized and attested to, and however many Satoshis are redeemable in that note that is issued as a token. And this has always struck me as something that seems painfully obvious. Somebody could do this right now. The tech is all there. You could build this, you could issue it. There are even people that are regulated and are willing to do it. And the problem has been businesses that don't want to just jump in and do it and sort of connect the dots and ask somebody to be a gold custodian and be the issuer and agree to redemptions and some of these things. But there are a couple. There are startups. There's one, AMLA is a company out of Australia that has built some frameworks and things, but it just seems like nobody can connect those dots. And I think it's a little bit, the fundamentals, I think there's this notion that there is animosity between the precious metals people and the blockchain people. And I think if we could all shake hands and all have a very serious conversation about what it would look like to truly issue a gold token, I think we could actually get it done. I'm wondering if people propose this kind of thing to you. Do you get offers for this?
I don't understand why it needs to be built on some type of layer of Satoshis. I just don't see where the Satoshis.
Well, it doesn't have to. It's just it's an option.
But why? I mean, why add Satoshis when they're, irrelevant? Just use the token as gold. It represents ownership of gold. And, the reason that you haven't seen a lot of money move into this sector yet is because all the money was flowing into creating tokens out of thin air that had no value, because that's where people could get rich. Everybody in the era of cheap money and 0% interest rates wanted to be an instant millionaire or billionaire.
Sure.
And gold is just not going to do that for you. You're not going to buy a token backed by gold and have it shoot to the moon. It's just going to do what gold does. Yeah. And if you want to originate gold tokens, you need the gold. So to create, a token, let's say gold is $1,800 an ounce, and you want to create tokens that are worth 1 ounce of gold, you need the $1,800 to buy the gold. But right. I can come up with some, the Shitcoins. I don't need anything. I can create millions or billions of these things out of thin air. And if I can get some idiot to buy it at some ridiculous price because he thinks some other idiot's going to pay an even higher price, I can get rich.
And I agree with you. I agree with you on all of that.
That's where all the money was flowing, right? Nobody was excited about some token that was tied to gold. And in fact, gold was being, beaten up constantly by the crypto people, particularly Bitcoin, because the niche that Bitcoin was promising to fill was occupied by gold. And so what Bitcoin had to do is say, hey, gold's worthless. We don't need gold anymore. We got something better than gold. We got Bitcoin. Gold's a worthless rock, right? Who cares? Look, there's an asteroid that's about to come into orbit that's got all this gold. I mean, it was all this nonsense about, trying to say that, gold's obsolete and that, I'm a dinosaur. Like gold is the equivalent of the horse and buggy, And why would you want a horse and buggy when you've got this brand new sports car called Bitcoin that's faster than the horse and buggy and really cool? And so it was hard for anybody in the whole crypto space to really get excited about anything tied to gold when they were trying to break away from gold, and to the extent that they needed a gold-like commodity, well, they had Bitcoin. That was what Bitcoin was supposed to do. But my point was always that Bitcoin is not digital gold. I mean, it's no more digital gold than you can have digital food. I mean, I could make something
to be
on a
fair,
computer.
I actually think I think the digital gold narrative is sort of a sophomore class of Bitcoin thing. Like the white paper is a digital cash system, and it explains that. I don't think that the niche of gold is necessarily. I don't think they're at odds with each other at all. The BTC people have turned it into that for exactly the reasons that you've explained, and I think you're absolutely right. But
well, that's because remember that to actually use Bitcoin as a medium of exchange, it's very expensive.
Sure.
And there are already other cryptocurrencies that are better at that than Bitcoin, that are easier to transact, where it's faster and cheaper. Mm-hmm. And so Bitcoin had to kind of reinvent itself. Well, if we're not really going to be a medium of exchange, and we're certainly not a unit of account, I mean, nothing's priced in Bitcoin, what are we? And then it was, well, it's digital gold. People are just going to buy it and hold it like they do gold. But they forgot that people don't just buy gold and hold it. You have a whole industry that's using gold. There's real demand for gold in industry. I mean, half of it is being made into jewelry, but people buy jewelry all the time. I mean, this is
Sure.
Christmas is coming up. Lots of people are going to give gifts of jewelry.
all of your friends are getting gold. I'm sure of it. Yeah.
Yeah, but gold. You know, they recently sent this huge telescope into space, and they had to have these mirrors. But in order for them to work and not like burn up or something, they had to coat them with gold, because gold was the only element that would do it. They needed gold to coat those mirrors. So you have no actual use or demand for Bitcoin. So that renders it worthless as a store of value, because there's no underlying market to support it. Gold always has value because people are going to need gold today, and they're going to need it in 100 years.
Let me play devil's advocate.
The beauty of gold is that if I have my gold and I hold it for 100 years, it's still just as good. You know, other commodities in 100 years are going to, they're going to decay, they're going to rot, they're going to spoil. So it's hard to hold a commodity for 100 years. I can hold gold for 1,000 years. They're digging gold up from the bottom of the ocean that sunk 400 or 500 years ago on ships. The only thing left of those ships is the gold. Everything else is gone, but the gold is still there.
I just got to see inside the vault at the American Numismatic Society last week. The head brought me in and he showed me coins that survived the Pompeii disaster, and they have been turned like a red patina because of the minerals that got sucked into the gold coins from the lava. So I am keenly aware, and again, I agree with you.
You can melt that down and extract the gold, and it will be just as nice as
was. Yeah, but those coins will be worth considerably less if you melted them down.
Now they're worth something as a collector item because they survived Pompeii.
Yeah.
So you wouldn't want to melt that coin down. But my point is, you could do it, and you'd have your gold. It hasn't lost any of its unique properties that make it such a valuable precious metal. And Bitcoin doesn't have any of those properties. I mean, Bitcoin copied the properties that gold has that makes it better money than, cattle or, something like that.
All
but
right, Peter,
it doesn't have any of Bitcoin's physical, Bitcoin doesn't have any of gold's physical properties that give it its value in the first place.
So let me, I'm going to answer a couple of your questions. I could sit and make a laundry list with the conversation here. But so you mentioned why nobody's using it as a unit of account, and why add Satoshis to a gold token. So those questions actually answer each other. The reason that you would add Satoshis is because that is the asset that is used to redeem on the transaction. So if you wanted to redeem your token for gold, that needs to go through a miner who needs to attest to it. And miners do absolutely use Bitcoin as a unit of account. And what they're measuring is the value of that bandwidth, the value in data. So there is a certain amount of bandwidth that exists. Now in BTC, that bandwidth is 6 megabytes an hour, which to me is completely insanely small. But if you have the ability to value every byte of data, and maybe you agree and maybe you disagree, I personally think that data is the most undervalued asset today. As things move toward digital, the ability to very trivially put a value onto each byte of data that goes across a network, that suddenly becomes something where you can monetize very simple, very small aspects of things. And there's also permanence. So blockchain generally is itself also a database. So whatever valuable data exists in that database also becomes part of the underlying value of the network as a whole, which you can then say is an attestation of value that works its way up to the coin, the token, the asset. So
yeah, I just, again, maybe you'd have to show me something, not within the context of this program, because it may be more involved. But from my perspective, I just think that that's an unnecessary addition to the whole process. And I think that for the most part, when you start to have real gold-backed cryptocurrency circulating globally, and they can have many different issuers, just like, when we had paper currency, you had all sorts of banks that issued paper currency, but it was all backed by the same thing. It was all backed by gold. You had many different issuers of currency. And that's when, when the Federal Reserve came in, we kind of replaced that. And so instead of having all these banks all over the country issuing notes backed by gold, we had the Federal Reserve, rediscounting those notes and issuing Federal Reserve notes that were backed by gold. But you can have all sorts of private companies. Governments could do it too if they wanted to. Just all kinds of companies issuing their own gold-backed tokens that could all circulate, because if they're all backed by the same thing, they all have the same value, just so long as people trust them and they trust the custodians that the gold is there. But most people are never going to redeem those tokens in physical gold. Why would they? I mean, they don't need the gold.
Sure.
They just need the ability to use it as a medium of exchange, and so the minute they redeem it, they would lose that ability. So
in order to
most
make
of the
those
gold
transactions,
is never gonna get redeemed until somebody actually needs gold, and then they may take some because they have to make something with it. But
those, so that's exactly it, though. You still need to pay somebody to do that transacting, and even you've said it yourself. Why not have gold-backed blockchain asset, essentially?
Yeah,
and so,
I mean, you could do that. I mean, there are tokens that move on various blockchains, and you got to pay the gas, to validate the transactions.
Yeah.
They have private blockchains that, they'll just verify it, whoever is running that chain. So there's all sorts of ways of doing it. But even if you built it on the Bitcoin chain and you somehow needed, Satoshis to pay for the validation, I don't know that you would need, how many would you need? One Satoshi? I mean, you don't need a whole Bitcoin. There's,
correct.
There's hundreds of millions. So it's like, and that's part of the whole thing, this so-called scarcity that I never bought into of Bitcoin, because Bitcoin is just this arbitrary quantity of Satoshis. It's, each one is 100 million
quadrillion.
Satoshis.
Yeah, I think.
Yeah, so, I mean, why, if let's say each Bitcoin wasn't 100 million Satoshis, what if it was only 10 million Satoshis? Then the supply would be 210 million. It wouldn't be 21 million. It'd be much bigger, right? So it's like, it's not really scarce. And I know people will say, well, Peter, gold is scarce because you can take an ounce of gold and you can break it into little atoms. That doesn't take away from its value.
Sure.
It's like, well, but I can't do anything with one atom of gold. If I need an ounce of gold to make a particular piece of jewelry, I need a full ounce. But if somebody just wants Bitcoin, they could buy one Satoshi and they got Bitcoin. I mean, they don't need 100 million of them.
No, precisely.
So it's like, what's the difference? Because you can't do anything. I can't do anything more with a whole Bitcoin than you can with one Satoshi, which is nothing. Doesn't matter how many Satoshis you have.
And actually, that's a fantastic point. That is such a good point. I'm going to use that point to segue. And so in my opinion, so first of all, when I talk about the Bitcoin civil war and the things that broke out of it, you have BTC is the thing that everybody thinks of as Bitcoin, but it's a bastardized, castrated version of the Bitcoin protocol. So I'm an advocate for BSV. I run a BSV mining pool. I do a lot of these things. And what it is it's Bitcoin with none of the asterisks. It's got everything restored to it from the original protocol and nothing taken away. And so what it allows you to do is to do sub-cent global payments. And it's not some theoretical thing. I have actually mined blocks that have 3 million, or between 2.5 and 3 million transactions in a single block. And the average fee is like a 5,000th of a penny. And so for that 5,000th of a penny in cost, regardless of scale, you have the ability to transmit tokens. And so if you were to, like, we can forget about adding sats to the gold backed token. Let's just say they're gold backed. We've issued a certain amount of tokens, and they can themselves be broken down to whatever. Let's break them down to the atom. If you want to transact in atomic gold, you actually have the ability to transact in atomic gold using DSV.
What you're talking about is at least trying to use blockchain or Bitcoin to have a functional alternative monetary system with payments, remittances that could be used as an alternative to what governments are issuing, and to take the power away from the governments to secretly tax us through inflation. Because once the governments have a monopoly on money, then they have a way of taxing us by debasing that money. Yeah. But if we have an alternative, then we can be free of that type of government oppression. And once the people want private money and they don't want government money anymore, then the government's ability to print money won't matter. Eventually, they'll have to tax us for the money that people actually want. Because the reason that, let's say, kings started using gold as money was because that's what was money. And if they wanted to pay their soldiers to guard their castle, the soldiers needed gold, because they wanted to buy food, they had to pay for it in gold. So where did the king get the gold? They had to tax the people. They didn't have any gold, so they had to take it from the people through taxation. Now, eventually, they realized that they could issue coins, and then they could debase them by sticking, copper in there, and that's where the word debasement came from. They started to inflate because they were issuing a legal tender, which was a coin. But in the private sector, they weren't doing that. But you could do the same thing with what I'm talking about with gold, or even what you're trying to talk about. But the problem is, all the people that got involved in Bitcoin, they were motivated mainly by money, by getting rich, by we're the early adopters.
Those are the takeover people. I don't like those people. And I understand that that's the culture today, but it's the same thing as saying, oh, wasn't the Federal Reserve always there? Isn't that an American institution?
But what happened is,
learn the history.
Once people got into Bitcoin, right, and they put a big chunk of their wealth into Bitcoin, or even they didn't put a big chunk, but let's say they bought Bitcoin when it was, a few dollars a coin or whatever, and it became a big chunk because it went way up. And now they wanted it to keep going up, and they just became so emotionally and financially, committed to this. They needed it to go up. They needed this. It's going to 1 million, and they needed to convince everybody else to buy into it, because that was the only way to keep the price moving up.
It has bred an extreme amount of toxicity, and what it's done is made
just run into one of these Bitcoin people. I mean, I'm sure if maybe this Thanksgiving it wasn't as big a deal with Bitcoin crashing, but the last couple of years, I mean, if anybody at the Thanksgiving table, had Bitcoin, I mean, these guys were like the new Harry Krishners. It was like they had to promote this, get everybody in.
I imagine you and Spencer must be insufferable at Thanksgiving dinner, depending on the year. What is your relationship like in that situation?
Yeah, well, we were in Dubai for Thanksgiving, and Spencer wasn't with us. He was with his mother.
Yeah.
I'm divorced. I have another wife, and we were in Dubai. But I mean, Spencer is still, very much, committed to this. He's just, he's young, and he's just, he's stubborn, and he thinks he knows everything, like a lot of 19-year-olds. And actually, I think he's 20 now. But he's 20. He's 20.
I don't want to get sound clips of you criticizing your son. So that's not the goal. We don't have to go there.
Look, he's no different than a lot of other 20-year-olds. I mean, you don't have a lot of experience. I mean, who's to say when I was 20, maybe I would have been foolish enough to get involved myself. I don't know. I mean, I'm not 20. I'm almost 60. So I've been around the block a few times. But, these millennials in Bitcoin act as if my experience and my wisdom is what's holding me back. Like that's somehow a bad thing. that if I was only younger, I would be wiser and smarter. And that's not how it works. You don't start out with all that wisdom. You gain it over time. And I think a lot of these young people,
friend.
yeah, a lot of these young people who have lost money and who are about to lose a lot more money, this is going to be a valuable learning experience and hopefully it will help them avoid losing money and making money in the future.
I appreciate that.
Yeah.
Peter, so here's the thing that I think continues to be ignored. And this is ignored by the blockchain people too. Like I am a rogue person in this space where I talk about how essentially you take everything that's good about cloud computing. Cloud compute as a concept, being able to push off computation to some other system that does it better than you can do even if you did it yourself. But you get to benefit from economies of scale, etc. But what Bitcoin was designed to do, very specifically, is allow all of the underlying value of cloud computing to be monetizable. Because right now you still even have to buy it in chunks. If I were to spin up an Amazon instance to be able to do compute, I have to buy it in a lot. And maybe I've got some left over that I have nothing to do with, but I have to pay for it. And it's a limitation in a couple of things. 20 years ago, it would have been a limitation in credit card minimums. PayPal brought minimums down to something like $5 a transaction on the internet, which was a pretty big innovation in 2008 or 9. But then Bitcoin was designed to bring that level down and being able to pay for a single instance of compute, even to the point where it's sub-cent. And what that allows, something like AI, for example. So these chat bots, I'm sure you've seen everybody change their profile pictures. Everybody's a new digital Muppet version of themselves. But if you could take that and say, see, even right now, you have to pay. I paid for a subscription. I had to pay $20 because transaction fees and everything else. But what if I could pay for one single profile picture and it cost me 15 cents and my transaction fee was a 5,000th of a penny? Now, with the technology, you could also do that with gold. And frankly, I would love to. I will fly to Puerto Rico and I will show you this in person, how to issue such a token. And given your reputation, I would love to do a test pilot or see something where we transmit gold tokens in a way that is attested as part of the transaction. It's built in exactly which ounce of gold, which bar did it come from? What is the serial number on that bar? And how much of it am I receiving? And this can be globally audited. And something like that could be issued today.
There's a lot of people. There's so many different projects out there right now with so many different tokens and different ways that they're being issued. I mean, so everybody is looking for ways to reintroduce gold into the monetary system so that it can take advantage of what you're talking about when it comes to blockchain and the ability to make tiny transfers of gold ownership instantly at a low cost to abrogate the need for anybody to transact in government fiat. I mean, the only reason that people use the dollar is because it's more convenient than using gold.
For sure.
As a medium of exchange. But if I had the option of using gold instead of dollars, why wouldn't I? Certainly as a merchant, right? If I have goods and services that I'm going to be selling or providing, and if I can receive real money, gold, in exchange for my goods or services, and it's cheaper than what I pay to receive phony money, dollars that are losing value, why wouldn't I want to get the gold? You know, especially if I knew that my suppliers wanted the gold, that my employees wanted the gold. Because of course, why wouldn't they? Why wouldn't you want to get your wages paid in gold if you knew you could pay your rent in gold, if you knew you could buy your groceries in gold? I mean, because gold is going to hold its value. And so whatever I don't spend, whatever I save at the end of the day is going to have more value. And especially when inflation really picks up. I mean, it hasn't been as big a problem in, let's say, the United States, but there's lots of countries in, let's say, South America, Africa, you know, wherever they have very high rates of inflation. Who the hell would want any of those local currencies? And so a lot of these people were saying, well, I'm going to use dollars, I'm going to use euros. Well, just use gold. Gold's a lot better. And so it's kind of like, why do people use Federal Express instead of the post office? It's better.
Right.
Why do they call an Uber instead of a regulated cab? Well, it's a better service. Or, a lot of times the private sector will come up with a more efficient product than what's available from a government provider that maybe has a monopoly. So the same thing is true with money. And people will vote with their feet, and they'll use a better money than the money that the governments use, because the dollar by design is a horrible form of money. They've designed it to fail. They even tell you, even before this recent spike up in inflation, the government said that we have a target of 2% inflation every year. So we want your money to lose 2% of its value every year by design. And of course, we may screw up and it may lose 3%, 4%, or 10%, right? We want it to lose value. We're going to try to make sure it loses value slowly. Well, but you don't want money to lose value at all. If anything, you want your money to gain value slowly so that your savings are worth more in the future, not less. And that will happen with gold.
So, okay, let's solve this practically. I think me and you could actually solve this problem, but part of the issue, and you mentioned multiple issuers. What if there were 10 companies globally? There's a couple on each continent that are issuing a gold token, but you all agree to redeem each other's tokens.
Go ahead. Yeah.
So if you all agree to redeem each other's tokens, I think part of that needs to be that the token is.
They're not redeeming. They're not redeeming each other's tokens.
But you'll accept each other's tokens as money if they're all issued on the same protocol, essentially.
Well, various merchants can decide. Like right now, you have a merchant that says, "I take Visa, I take MasterCard, I take American Express, I take Diners Club,
or whoever else." Yeah.
Right. So a merchant could say, "Here's the tokens I'll take. These are the ones I trust, and eventually over time, right? Some of the ones that really can't build up trust will go away, because that's going to be the key feature of any asset-backed crypto. And it could be you can have a crypto backed by silver, you can have it backed by whatever you want, right? All kinds of commodities,
jelly beans.
But you just have to trust that they're there. Now the problem with jelly beans is over time they're going to go stale, so it'd be very expensive to keep those jelly beans fresh. but it wouldn't make sense to use jelly beans, but but jelly beans have more value than Bitcoin. So at least a jelly bean token, you could eat them, assuming you like jelly beans.
Sure. But, if you need the calories in a pinch, absolutely.
But the thing is, certain tokens will be accepted in the marketplace. People will recognize them. If you come to me with a token I've never heard of, I'm like, well, shit, why do I want that token? How do I know there's actually any gold there? I never heard of the issuer. I don't know who's behind it. But what we don't need is government. Like right now, you're having this big, hearing, Sam Bankman-Fried, we need more regulation, or they're saying we need regulation of stablecoins. We don't. We have something called the free market, or we're supposed to. That's the regulation. We need intelligent, informed consumers shopping around. We need businesses that are vying for reputation and building a brand, and they can seek out independent auditors. They can buy private insurance, and the insurance companies, obviously, if they insure the deposits, they're going to be auditing and making sure there's no monkey business going around. So whenever the government gets involved, it just runs up the cost and drives down the quality. But they always exploit things like what happened with Sam Bankman-Fried, and they say, you see, if we only had more government. But Bernie Madoff had all the government in the world. He had the SEC, he had FINRA, he had all kinds of regulatory agencies looking over him, and nothing.
Yeah. Well, I think Sam Bankman-Fried was a plant, frankly. If you wanted to get regulation, go put some regulator's kid in charge of an exchange and rip a few $1 billion out of some people. But I don't want to get conspiratorial. I think to your point about stale jelly beans, and again, you're right. I agree with you. But one thing that absolutely also does not go stale is data and computation. Computation is just digital work. And so if you have a computer that is capable of solving problems for you, that capability is itself a valuable asset. It's not physical. You can't hold it. But the ability to compute a problem, or the ability to brute force possible.
The idea, though, to solve a problem that ultimately creates in a Bitcoin, that solving that problem doesn't help me, because it's a problem that doesn't have a solution.
No, I'm not talking about the hashing. I know where you're going with that. I'm not talking about the hashing. I'm talking about the ability to compute anything. Bitcoin is not just about computing hashes. This is what the BTC people do. But truly, BTC is not Bitcoin the way that it was fundamentally designed. BSV and the way that BSV uses the Bitcoin protocol unadulterated. So this is like pre-central bank United States. Let's say it's 1782 and we're all fighting for the same thing here. And we've not established a central bank or Supreme Court, any of that nonsense. Okay. And so if we're at this place where you have the unadulterated Bitcoin that is capable of valuing all kinds of things. So for example, let's say that you have a message that you have to send in a way that you have to be able to prove is not been intercepted. So you can send it with the proof of work and you can use it. You can bootstrap an encrypted chat app on top of Bitcoin. You can prove that it's the person that you're sending it to using their keys, and you can transmit data. You can also upload data.
I mean, I get you. If you can come up with some way that my ownership of a Satoshi or however many I need somehow accesses me the ability to get some computing power that enables me to do something else, then there would be value. Right?
There it is. That's the bull case. This is the BSV bull case, Peter. Thank you.
A guy like, Michael Saylor, who says Bitcoin is energy. It's digital energy. I go, wait a minute. You need energy to create Bitcoin, but once you've produced the Bitcoin, the energy is gone. Bitcoin is not a battery that releases energy that I could utilize. But if what you're saying is there's a way for my Satoshis to actually offer some value proposition to me that I could do something that's cheaper than I could do it without the Satoshis, that could have value. The mere ability to give my Satoshis to somebody else.
There is no better way to send a penny around the world or a sub-cent value of anything else.
But you have to send an actual penny, because if I just send the Satoshi, I've sent nothing. But if the Satoshi lets me send that penny,
you can issue a dollar token. We can issue a dollar or a gold token. I'm telling you, I will come to you and we can do this. I can send one penny's worth of gold as a token from Puerto Rico to New York City in less than 2 seconds and for less than a 5,000th of a penny in cost.
Yes,
and it's
exactly.
Absolutely there.
We agree. I just didn't know that Bitcoin needs to be a part of that process in any form. I just think that I can send you that token without involving Bitcoin. But if you're saying that by using Bitcoin, I can actually do it more efficiently, then you might have something there. Then you might have a value to that Bitcoin. What that value is, I don't know.
Sure.
But
and that's the thing. I don't think
anybody can make another Bitcoin, just with a different name that could do the same thing.
Maybe. So I think, and this is part of the issue, is that there is this bull case for Bitcoin where everybody just says the number is going to go up and we don't use it for anything. And that has been the largest problem for getting people to understand that its real value is the ability to transact in very small amounts. And this is the real value. This is the value of, you ever click on it, you may subscribe to the New York Times, or maybe you don't, but every time somebody sends me a New York Times article and says, oh my gosh, you got to read this, and then it tells me I need to pay $8.99 a month, that drives me crazy, because I would totally pay 25 cents to read the article, but I have no practical way to send 25 cents to read the article.
Yeah, exactly. Because, I mean, obviously, if I want to send somebody $1 million, it's easy to do.
Yeah.
And if I have to spend $25, $50 on the wire, well, it's nothing. It's $1 million.
Yeah.
But if I want to send somebody $1, that's where you have problems. It's with small quantities of transfers, and
yes,
and that can be solved with many different ways. But the way I like to do it is with gold, because not only is gold good money, but it's universal.
UPS it? How would you do it?
Well, you tokenize it, and then you allow the tokens to be transferred.
Sure.
So you issued tokens, and that's why initially, when we were on a gold standard, in order to make small transactions, you couldn't use gold, so you used silver. Or even when the transactions were smaller, you couldn't even use silver, so you used nickels. That's why we had the nickel. Or you used copper. That's why we had the penny. But with the internet or with blockchain, you can actually use gold to buy a penny's worth of stuff. You don't need that penny anymore.
Right.
Because you could break the gold down. If you tried to make a gold coin that was as small as a penny with a penny's worth of gold, you would lose it. It would be like a little speck.
I just did that. So I was at the Numismatic Society. The guy that runs it is Dr. Jill Brandsborg, and he was showing me Lydian coinage. And so they had nugget, the size of a coin that you'd expect, and there were things about the size of a BB, and they were gold. And he was saying, yeah, this was obviously very impractical. And I think that people understood this. That was 6,000 or 7,000.
Although I've seen some people, but what they're doing is they're like building gold threads into a bill. And so the bill, if you could melt it down, would have a tiny amount of gold. But it's just inefficient to spend that much money.
Yeah, it's crazy.
Produce.
Right.
It's so much easier on blockchain. It doesn't make, that's not really practical. And then again, you have the physical limitation of the bill. But, what's good about having the physical gold is the added degree of privacy to the extent that you want that. Because anything that's going to be on a blockchain, there is no privacy. Anything that you're transacting, all the governments are going to be able to know exactly what you're doing. They'll come in and they'll get, warrants.
To a degree. So there are some, there are mitigations to that. So if a blockchain is used widely, now again, BTC Bitcoin, you can only do 6 megabytes an hour. That limits you to 7 transactions a second globally. The auditors look at that and say, hey, no problem. I'll throw my old computer at it. But if everybody was transacting globally, let's say you had 100,000 or 1 million transactions a second globally that were doing penny redemptions and letting people log into the New York Times and pay for 25-cent articles, and then paying for a stick of gum with tokenized gold, or people logging into a website called Twetch, for example, which you should use, by the way. I think you would appreciate the privacy aspect of Twetch. So what that is a social network that's bootstrapped over Bitcoin. Everything about it is encrypted, or you can decrypt it, but it allows you to choose what your data, where it goes, who monetizes it, and what you can do with it.
And
once
it's
something is
interesting
created.
too, because a lot of people, the minute you talk about, oh, I'm concerned about privacy, it's like, oh, why, you a criminal? Are you doing something illegal? And my concern is that I'm worried about a criminal government doing something illegal. I mean, it's like, because why don't you want the government to know everything you do? Well, I don't want the government to know everything I do, because what if they take that information and they use it against me in some way that harms me? Not because what I'm doing is criminal. What I'm doing can be perfectly legal, but that doesn't mean the government can't take that information and use it against me in an illegal way, because everybody assumes that government is good. There's no bad people in government. Well, it's a lot of bad people in government. Governments do very bad things. That's why we have to keep a leash on them. That's why we have to be very vigilant and keeping a check on government. Governments are not good. And the people that go to government, by and large, are not good.
No, I agree. And that's the thing is Bitcoin, there's so many misnomers in the Bitcoin space. I can't even tell you how irritated that I get as an advocate. I'm an originalist. I'm very much the same kind of guy that would be a constitutional conservative scholar, and therefore I'm a libertarian. And then I have to deal with people talking about the nonsense that is people's understanding of government today. But Bitcoin fundamentally solves a privacy problem as well. And I think I actually saw a comment go by. The best example is if Bitcoin isn't private, who is Satoshi Nakamoto and how many coins does he have? And nobody can answer that question in an absolute sense. And the reason for it, I'm going to give a shout out to Joshua Hensley, a buddy of mine that posted it. But he's absolutely right. And it shows that if you manage your keys properly, you manage Bitcoin properly, and if the economy is incentivized to give you tools that allow you to manage it properly, well, then we all get the opportunity to transact both money, but also data, also important data in communications or news or whatever, in a way that is censorship resistant. There's also something I think you can appreciate.
Is an aspect of Bitcoin, that everybody on Wall Street wanted to sacrifice, because in order to sucker in the institutional money, in order to move the price up it got up to almost 70,000. But in order to get this bigger money to come in off the sidelines, they had to clean it up and act like, oh no, this is going to be regulated. There's no crime involved. They had to sacrifice the whole privacy aspect of it, which was
Michael Saylor doing that all the time.
Values, early on, and say, no, we don't have that anymore, because they wanted to make it appeal to regulators and appeal to institutional investors who didn't really understand anything about it. They were just getting suckered into buying it because they were afraid of missing out. There it was all FOMO. It was like, hey, you better buy this, or you're going to have to explain to your investors why you didn't buy it, and it's $1 million a coin, and you don't own any of it, so you better buy some just in case. I mean, that was this whole big pressure to buy it.
And this is precisely why you will never find the word gold mentioned in the Bitcoin white paper, but he talks about cash. He talks about honest nodes. He talks about a system that allows commerce on the internet to have its friction reduced to an incalculably small amount of money. And the reason for it was Satoshi Nakamoto believed that we have a fundamental right to do private business on the internet as easily as we can do business with physical cash, but also have those same properties.
And unfortunately, our rights of privacy have gone out the window. I mean, governments do not believe that anybody has the right to keep anything private. Everything has to be shared with the government. And in theory, they're saying we need this to protect us, right? Because that's the only way they can catch the terrorists and the drug dealers and the money launderers.
Right.
But, there's an old expression that you never want to sacrifice some of your liberty to get some safety.
Amen.
You don't want to trade liberty for safety, because you'll end up losing both. And that's what's happening. The government's saying, hey, you need to give up your rights so we can protect you from the bad guys. You know what? I want to keep my rights. If that means that there's a little bit more money laundering, a little bit more drug dealing, all right. I mean, I don't like it, but the alternative is worse, especially once you go down this slippery slope
I agree.
Of empowering government. Because, even the good people that go into government get corrupted if they stay in government. And so you don't want to allow them to have all that power. And that information is power. The more they know about every citizen, the more power they have. And so this is very dangerous to concentrate all that power in the hands of government. And they know that. I mean, that's why they're always like, oh, but we got to stop the terrorists. I mean, it's really all about the tax collection. That's what they want. They don't give a damn about the terrorists.
Sure, no,
they care about
just
the guy
scare
that's not
everybody
paying
and
his
take
taxes.
their money. We can all be safe if we all live in prison.
Yeah, and the other thing too is, like, they say, like, Peter Schiff advocates tax evasion. I don't advocate it, but I know that because people can evade taxes, governments have to keep taxes lower, because the higher taxes go, the more people will try to evade them, because the benefit is higher to get away with it.
Yeah.
But
prize got bigger.
If they make it impossible to evade taxes, if they have so much information, if they get us in such a box that they know that no one's going to evade taxes, well, then they're just going to keep jacking them higher and higher and higher. I mean, they try to say that, oh, these people evading their taxes, they're making everybody else pay more. No, they're allowing everybody else to pay less, because governments know that they have to keep taxes to some type of limit, or people won't comply. People will find ways around it.
This is why it's really important to reduce the friction of cash, and that's what Bitcoin was supposed to solve, and it's what it has not solved because of the investment thesis of BTC. This is why I'm a BSV advocate, because again, if you go back to Bitcoin circa 2009 to 2011, this is what Satoshi Nakamoto was talking about. He was talking about reducing friction, even to the point where the reduced friction allows you to reduce the friction to paying your own taxes, for example. You remove the need for predatory auditors and all these, and accountants. CPAs are like the worst business in the country.
Why do you think all these governments now are trying to force the low tax countries to raise their taxes? Because they don't want people to leave their countries to go to countries with lower taxes. So they want everybody to raise their taxes up so they can jack taxes up even more on their own citizens without having to worry about them fleeing.
There's no safe place. Yeah,
it's like they're trying. All these governments are trying to collude. It's like, we don't like collusion. The government will say it's illegal for companies to get together and fix prices, right? They want competition, but somehow they can fix tax rates. Hey, it's okay for all these countries to come together and decide on a tax rate. We don't want competition. Why not? Why don't we want competition in governments? Why don't we want them competing for low taxes? Because everybody wants low taxes, right? Because governments are supposedly providing services, and we pay taxes for those services. Well, don't you want to pay lower taxes for those services? Don't you want competition? Of course, but the governments, they don't want competition, just like businesses don't want competition. So they collude with each other and get away with it.
Absolutely. Peter, we've got less than a minute here. It's been a pleasure to have you on. I'm dead serious. I will fly to Puerto Rico, and maybe not for Christmas. Let's talk January. I would be very happy to set up a demonstration. We can get you a hand cash wallet. We can issue tokens. We can issue one token. Let's just issue one. We will send it from Puerto Rico to anywhere else in the world that you want. I have friends in most of the countries that have internet. And so we can get this figured out. I would love for you to see that it's capable to send that same token back and forth. We can send it back and forth 50 times, and the amount of money will be five thousandths of a penny that we will spend on the entire demonstration.
But if you tie the gold to it, you can do it at the same low cost.
Absolutely. It's a token issued over. Yeah, 100%.
Yeah. So anything that makes the token transfer for less money is what adds the value. The question is, Amen. Can you do that without this token, or do you need that to make it?
You have to have somebody do it. How do you send a token over a channel that you don't control? So we trust MoneyGram or we trust whatever because insurance and business relationship. But how do you send it?
What blockchain are these tokens are they traveling on?
BSV specifically. So it's Bitcoin, but with nothing added, nothing taken away from the original Bitcoin protocol. So this is what Bitcoin should have been capable of, but was bastardized over the Bitcoin civil war. But we went and said, hey, let's see if Satoshi was right. We've bootstrapped it. It exists. If you're a Bitcoin holder, you're a BSV holder by default because of the way that keys work and all of that. But for example, I run a pool, and that pool we've done 7 out of 10 of the biggest blocks in the history of all proof of work blockchain mining, and these are 20,000 transactions per second, millions of transactions per block, and those blocks contain everything from simple payments to NFTs, tokens, all kinds of other things. It can be communication scripts, it can be encrypted data, it can be chat apps, it can be social networks, it can be anything. So it is absolutely doable. It was always doable on Bitcoin. It is no longer doable on BTC, but that doesn't mean that the original Bitcoin idea is not valuable. And I think if you were to see it, if you really saw in person how it worked, I think we'd be doing business together, Peter. This isn't a pitch, by the way.
But I guess anybody who creates a gold-backed token could attach it to that blockchain if they want.
Absolutely. And they can be, I'll accept a Schiff gold token for a Kurt gold token if they're the same.
And then
weight.
You would need some quantity of that token in order to cover the cost of each transaction, and that would create some value for those tokens because I could use them to pay the cost of sending my gold around.
You absolutely can. And so minuscule. So yeah.
Yeah, no, that again, that makes sense, because somebody has to come up with a use case, because everybody tells me, well, the use case is you can transfer it. Well, that's not a use case because I'm not transferring anything. I'm transferring nothing. They don't get that, but if I'm transferring something and the use is that I can transfer that something at a lower cost, then that's a use because I've moved something of actual value.
Yep.
But anyway,
Beautiful.
I'll give one quick pitch though to end the interview.
Go for it, Peter.
So to the extent that you got some listeners that have, the bastardized version of Bitcoin, BTC, or any of these other shit coins, out there, these coins have $800 billion or so in value, market cap, or $700 billion maybe if you take out these big stable coins. It's not too late to sell. I think Bitcoin is headed much lower. I think next year is going to be probably worse than even 2022 was, and 2022 was a very bad year for Bitcoin. But I think a lot of people are going to lose a lot of money. I think we're going to hit a lot of margin calls and a lot of forced selling, and I think a lot of regulation is coming too, which is not going to be good.
No.
Obviously, FTX is going to be a catalyst for this. It may have been coming anyway, but now it's going to come quicker and it's going to come harder. So get out. I mean, this is like, you've got so many warning bells that have gone off. They've rung all these bells. They say no one rings a bell. Well, I mean, this is the great Ben that's been ringing and ringing. Yeah. Just that a lot of people have, tuned it out. They don't want to hear it. But you can get out. You don't have to sell everything. I mean, I would sell everything. But, hey, if you want to hold on to a little bit and gamble with that, all right. But take some money out. But there's some real opportunities now around the world. We talked about mining stocks, gold and silver stocks, but there's a lot of good stocks too that can be bought all around the world as good inflation hedges. The stocks are relatively inexpensive compared to their earnings and their dividend yields and their book value. There's good companies all around the world. Forget about these, bubble type companies that were part of the mania tech companies with no earnings, or social media, or all this crap, or buy now, pay later, all these gimmicks that are out there. But there's real businesses that people have ignored for a decade or more that are viable investments that you can make. So now is the time to try to preserve the gains that you had in crypto by getting out of crypto, or if you got in later, to at least cut your losses and take the money that you have left and invest it productively in some of these assets around the world, good dividend-paying stocks, and have an exposure to gold and silver, particularly through the mining sector, where I think there's going to be some spectacular, Bitcoin-type returns, I think, in some of these junior mining stocks. And so if you're interested, contact us at Euro Pacific Asset Management. You can see the URL up above my shoulder. You can give us a call, talk to some of my reps there about setting up an account for me to manage. I also have 5 mutual funds that I manage. You can read about my funds. You can buy them on pretty much any discount broker out in the United States. So I can manage your money there as well, even if you don't set up an account directly with me. And of course, remember to listen to my podcast. I do a regular podcast, sometimes 2 a week, sometimes 3, sometimes 1, depending on what's going on in the news and how much free time I have. But you can listen at schiffradio.com or on my YouTube channel, The Schiff Report. And follow me on social media. I'm on Twitter is the one I use most. I'm almost at 900,000 subscribers. It's taken me a while to get there, but hopefully I'll hit 1 million soon. So
let's follow each other, Peter. I will retweet you. You can retweet me. We're gonna get you to 1 million together.
Well, how many you got now?
I've got about 30,000. So if you get all of my followers, we got you a little bit along the road.
Yeah, I generally don't. It depends. It'd be interesting because I try not to follow a lot of the crypto guys because I don't want, even though some of these guys are my friends, I just don't want it to look like an endorsement. Like if I follow a guy that's advocating crypto, I don't want people, oh, see, you telling because I don't want anyone blaming me when they lose money in crypto.
No, I hear you. Peter, thank you so much. I really appreciate it. I appreciate your time. It's been a pleasure.
Bye-bye.
Bye. So everybody, that was Peter Schiff. I mean, one of the best talkers. So do indeed listen to Schiff Radio. He's absolutely right about the value of precious metals in general and a whole lot of stuff, political, finance and fiat currency and all the rest of it. So I can't disagree with him there. And I think he will be increasingly amenable to real blockchain technology, what Bitcoin is actually capable of. So if you've enjoyed the show, please like, subscribe, hit the alert bell, and tune in every Tuesday at 2 p.m. Eastern Standard Time, where we will do the CoinGeek Weekly live stream. And just a reminder, as I'm trying to let my brain catch up with all the information that I just received, be good to each other, everybody. I will see you probably next week. I'm going to take some time off for Christmas at some point, but Mr. Moon and I need to decide when that's going to be exactly. So everybody, thank you so much. I'm Kurt Wuckert Jr. We may have a special on Thursday. So watch the calendar. See you, everybody. Bye-bye.
This is London, coming out.